quite a bit of sort of green or environmental consternation about it. But it is an extraordinary deal for this country, isn't it?
Oh, it's a very, very large deal. It's amazing how long Olympic Dam seems to have been around for. I think Western Mining picked it up in the late 80s from memory, and it's still obviously quite a few years from coming to fruition, just how long these projects take. But BHP generated about $25 billion in cash flow last year, so the $30 billion investment isn't, whilst on the raw figures is very large, for a company of BHP size, it's got to do something with its money, and that's either return it to shareholders, buy back shares, or invest in projects like this. And there aren't that many, or take over companies, and there aren't that many opportunities that can actually invest its money in. Leading to whether it would be good or not, I guess it's difficult to know. My view on commodities is that they are, obviously, like most in the market, very overcooked. That's why BHP is trading on a PE ratio of less than 10. So it's hardly a new view. I think Chris makes a very good point in terms of uranium to fuel transport in the future, which is very true.
Energy alternative.
Partially clean, but it's more so just the peak fuel, the peak oil argument, which I think many experts think oil production peaked probably 4 or 5 years ago. So look, in the US it peaked in about 72, and it took quite a few years for people to realise that. So in terms of that, there certainly will be, I think, pretty good growth in uranium. As for the likes of copper and other commodities mined at Olympic, well, that's difficult to tell. I think most investors and analysts are assuming that the likes of copper and iron ore will be dropping in price substantially, and that's why BHP's priced as it is. So they've got a lot of cash flow, a lot of cash to play with. I think it's probably a reasonable decision, given they either do that or they return it to shareholders. So it's not a terrible decision, but time will tell on how successful they are. But that's what BHP shareholders pay the likes of Marius Klopper's sort of $10 million a year to make these decisions to allocate capital, and let's hope he does a better job than previous BHP CEOs.
Yeah, exactly. That many of them have been craving, even though many businesses have been concerned about having a carbon price come in.
Oh, I think it's been on the record that the steel bribe was an absolute disgrace.
The steel
in terms of the
yes.
In terms of the carbon, I think it's to be honest, a bit of a sideshow. I'm not particularly either way on the issue. That a lot of people seem very emotive on the carbon tax, whether it should or shouldn't come in. I don't think it makes a huge difference either way. I think the key issue for Australian business in general is sustainability of resources. Whether or not carbon causes higher temperatures and environmental damage, I don't know. But what we do know is there are limited resources, and business need to look to that, almost linking into the previous conversation and Chris's points. But as for the whole carbon pricing, I think it's just a huge sideshow. It's a political exaggeration and just a complete waste of time. And the steel payments are just an absolute debacle. They're disgraceful and a shocking waste of taxpayer money.
Cynthia Kearns, about this.
I think this is a great portent to where the rest of the banks and the Australian economy is heading, and we see a lot of optimism, well, not pessimism, I could say. As you mentioned, doubtful debts, or I think they call them arrears, rose from 150 to around 300 million. Which is a staggering result. If you look at the entire profit of the business, it was about $200 million. So that just shows how risky banks are. My views are, and they have remained, so that property is about 40 to 50% overpriced in the major cities, some more than others. We've already seen Perth and Brisbane off around 10% in the last year, Melbourne off about 7 or 8% after inflation.
Are you talking residential or commercial?
I'm talking residential, commercial, and some cities are down more and some is quite steady. But the major exposure of banks, and look at the Commonwealth as the best example, is to residential house loans.
Yes.
And that's been partially due to appalling government policies like the First Home Owners Grant or the First Home Vendors Grant, as it's better described. So we've got this brewing storm in the housing market. As Jeremy Grantham said, there's two bubbles that are yet to pop in this world, and one's the Australian housing market. And if and when that does collapse, and you think it will eventually, because assets always do tend to revert back to their intrinsic value, we could have a pretty big problem on our hands, because the Bank of Queensland's a mere sideshow when you look at Commonwealth Bank with $330 billion in loans on their balance sheet and about $35 billion in net assets.
All right.
It's interesting too that
complaining about it or feeling very envious about certain senior executives' very high pay. But, you know, we've seen a couple of, you know, things at both ends of the spectrum. ANZ, we've seen virtually order a pay freeze. Their top 900 executives are going to have their increases capped at 1%. And in most cases, the increases will go to much lower paid executives if they perform well. We had Woolies' new CEO, his pay level down, but then on the other hand, you've been looking at, you know, Wal King, former chief executive at Leighton, and even Rupert Murdoch, their pay going up sort of exponentially compared to the performance of the company.
Oh, very much. I think the ANZ point, interesting one. Mike Smith, the CEO of ANZ, was given, I think, a $10 million sign-on bonus. So I think he's pretty well insulated from pay freezes. Yeah, and I guess the thing to note with executive pay is it's across the board. There aren't the massive payouts that we saw in 06-07. There's no Alan Moss getting $30 million. There's no Phil Green getting $40 million over 3-4 years to run a bankrupt company. Not a bankrupt company that collapsed. We're not seeing that as much, but we're seeing across the board quite a lot of fixed pay increases and quite a lot of bonuses increases because executives aren't increasing shareholder value. So boards are stuffing them with fixed cash pay, which isn't subject to hurdles and they don't need shareholder approval for.
Yeah, no, it's quite extraordinary, isn't it? Look, Chris, do you have a view on this?